So let's go ahead and look at the format to the final account and basically the preparation of the final financial statement. So the head office and the independent branch will prepare their own independent financial statements. However, at the end of the year, the head office should prepare what we call the combined financial statements. So preparation, let's go ahead and prepare the income statement. We're going to start with the income statement and later on finalize by preparing the statement of financial position. So we have XYZ Limited. We have XYZ Limited. So XYZ Limited has a branch, an independent branch. So we will have the income statement. For the year ended. Say 31st December 2024. So we have the head office, we have the branch, and we have the combined. And now we start with the sales. So we will record sales for the head office, sales for the branch, and add the two to get the combined sales. And then from here we have goods sent to branch. Goods sent to branch, we record them there. Here we don't have any. And then we have less goods stolen in transit. If we have any goods that were stolen, less goods stolen in transit. And that will give us the net sales. We go ahead and less cost of sales. Less cost of sales. So for the cost of sales, we will have opening inventory. We'll have opening inventory. We have opening inventory for the head office. For the branch, we add the two, we get combined. We add purchases. You can add the purchases by the head office, purchases by the branch, and the combined. And then we have the goods from head office. Those will count as purchases in the branch. Goods from head office. Goods from head office. Next we can have obsolete goods. We can less obsolete goods. We less obsolete goods. Can be from the head office. or from the branch. We less destroyed goods. We less destroyed goods. We go ahead and add all these, and if we add, we get the cost of goods available for sale. Cost of goods available for sale. Get the cost of goods available for sale, and then from there we can less the closing stock. We can less the closing stock. Can less the closing stock, and if we less the closing stock, we will get the gross profit. We'll get the gross profit there. Now from that point on, we can go ahead and less expenses. We less expenses. So from expenses we can have unrealized profit. Can less unrealized profit. Remember, unrealized profit will only appear in the head office if the head office had sent goods to the branch and those goods still remained unsold at the end of the year. So from there we have administrative expenses. Administrative expenses. And then from there we have distribution costs. And if we have those expenses there, we can get the net profit. The net profit. Now, if we get the net profit, we need to transfer the branch profit to the head office. So we transfer branch profit to head office. So what we do, we less the profit from the branch and add it to the head office. So here we will have 0, and we will take this profit here and add it to the combined. We will have the profit for the organization like that. So if we less, we get nothing there, and these figures, these two will be equal. These two will be equal. These two will be equal, and that's it. Now let's go ahead and prepare the balance sheet. Let's go ahead and prepare the balance sheet. So we have XYZ Limited statement of financial position. Statement of financial position as at 30th April or 31st December 2024. Make it the same as the previous one. And now we will start with the non-current assets. Non-current assets. Non-current assets. So for the non-current assets, we get the property, plant and equipment. And remember, we have the branch, the head office. Have the head office, the branch, and combined. So PPE we have for the head office, for the branch, and the combined. We have the branch current account. Branch, it will appear here, branch current account. Remember, we said earlier that the balance in the branch current account is an investment by the head office into the branch. So this should be net of the unrealized profit on closing stock. We have it here. It will not appear here in the branch but in the head office. Next we have the current assets. Current assets. We have the current assets. So for the current assets, we get the inventory. We have the inventory, and the inventory we get for the branch, for the head office, for the branch, and we add the two to get the combined. We have receivables. Receivables for the head office, for the branch, we add the two, we get the combined. Next we have bank or cash. We have for the head office, for the branch, and the combined. And next we have cash in transit. Cash in transit. Cash in transit we have for the head office, for the branch, and the combined. From there we can get the total assets. We can get the total assets. We can get the total assets there. From there we have equity and liabilities. Equity and liabilities. So for equity and liabilities, we have ordinary share capital. This will only appear in the head office and in the combined. We have retained earnings. Again, this will only appear in the head office, none in the branch. And lastly, we have the head office current account. Current account will appear here. And then we have current liabilities. We have payables. For the head office, the branch, and the combined. And there, my friends, is the format for the income statement and the balance sheet. Now, one more thing we need to look at before we solve a past paper question is the closing stock, the value of the closing stock, and that will be our main concern, is how do we value our closing stock. So we can have it down here, closing stock for the head office. So valuation of closing stock, valuation of the closing stock in the head office. In the head office. Now, the closing stock at the head office should be valued as follows. We usually start with the opening inventory. Opening inventory. The opening inventory, we get the cost there, and this is at cost. That one is at cost. We add the purchases. We add the purchases right there. We less the goods sent to branch, less goods sent to branch at cost. We less it there. We less obsolete or spoiled goods. Obsolete or spoiled goods. And lastly, we less the cost of sales. We less the cost of sales. So if we less the cost of sales, we are left with the closing stock. We are left with the closing stock right there. The next thing I want us to look at is the valuation of the branch closing stock. Valuation of the branch closing stock. Closing stock. Valuation of the branch closing stock. Now, remember, it should be valued at invoice price. This should be done at invoice price. And recall, I said invoice price is the cost plus the markup. It is the cost plus the markup. So we will be taking the opening inventory. Opening inventory. This is at invoice price. We also get add goods from head office. This is at invoice price. We add it there. We also add purchases. We also add purchases. We also go ahead and less any shortage in stock. Less shortage in stock. Go ahead and less it there. And then we go ahead and less cost of sales. We less the cost of sales, and from there we'll have the closing stock right there. Next, let us look at the combined closing stock so that we can look at an illustration. Combined closing stock, so that we can go ahead and look at an illustration. Combined closing stock. We have the head office closing stock. We include it there, and then we add the branch closing stock. Add branch closing stock. This is at cost. Add it there. And then we less unrealized profit. We less unrealized profit on branch closing stock. Less any unrealized profit on branch closing stock. And from there we'll have the combined closing stock. So those are the formats. And our main concern was how to value the closing stock. If we know that, then the rest is quite easy, because from the income statement you can see it's fairly what we have been doing in the past. It's very similar to the income statement of any other business. The only addition is the goods sent to branch, which will appear here as sales for the head office, and we less the goods which were maybe stolen or spoiled in transit. We'll include it there. Next we have the cost of sales. The only new thing is the goods from the head office. We less any obsolete goods, any destroyed goods, and then we have the cost of goods available for sale, and we'll go ahead and less the closing stock. The closing stock, recall, this is the formula we use to value the closing stock, both in the branch and in the head office. Now from there, let's go ahead and look at an illustration.